Here we have a weekly chart on Google. And I'm going to update the diamonds. And we're going to go through this momentarily. One of the things that we're going to cover now that we have the weekly SMF chart up is that each one of these delta movements are $15.51 per line. And what has happened here clearly last week is we came right up here to the major area that we had talked about where Google would come and test. Last week there was a markdown and there was a lot of margin calls. Forced liquidation was in play. But here we are at 594 and we're right across here at this major diamond area on the weekly. The other time frames that people will be looking at is the main thing to understand here, that on this particular weekly bar right here, I'm going to clearly show you on that weekly bar why Google sold down from here to this low again. But down here at that 576 area, once we had the original weekly breakout to the diamond high, we maintained the upper end of it. Now, this diamond cluster of support levels right here are very, very important. The reason why I'm going to pull up this chart right here, I'm going to lift this up because I want the MMTs to know that the half bar is now on a weekly level 606.3, and you can double check that. That's this bar right here. What people need to know, that the weekly high was 618.3 and the weekly low was 593.75 during the monthly calendar options expiration in our MMT platform. The thing that we will be looking for is where the major support levels are going to come into play right here across this diamond weekly area, because this is the breakout. We've had the distribution to support level. If we do break down, the next area is 585. That's one delta down to this support area right across here where the weekly buy signal started. Remember, it's an ascending 4-week breakout. You got the weekly moving averages. The 10-week is above the 20. It's rising and everything. However, it's a holiday weekend coming up, and we're going to be looking at deflated calls and puts relative to this weekly breakout chart. And below here is that this is the weekly. We're going to be looking at one delta down, is still 584, 113. But after that big reversal, last week, Italy, France, Germany, Portugal, all the worldwide events going on, MF Global having to liquidate accounts, you name it, hedge fund managers having collateral, people own Google, big money owns it. If they have to be forced to liquidate it, you're going to see moves like this. But the problem is that the problem for the bull is that our bull trend's got to stay above the high of this weekly test right here, the high of this bar, of that diamond. And back on the high that day, just so people know, is $599, and the low that week, that was an earnings week back on 10/10, where this bar occurred. That was a weekly breakout on its earnings, quarterly earnings. So this area right here, these two diamonds and the diamond support is going to be the key. If we break below it, we'll look below where the next delta down movement is. Your standard technical analysis charts are, for the public, is that the percent DS is at 80.59. It's still very strong. We're getting into a little bit of an overbought zone. We can't ignore what the public will look at, the big money people. The MA moving average is way down here at 497. That's a 200 week. What is bullish about it is you got rising moving averages, just like in our platform as a market maker platform. This is standard technical analysis, but you got a good bullish case here. You went from a bear trend to a new bull trend, and you did. Why? Well, when Google was always closing below the 10-week moving average, and it stayed below it 4 weeks in a row. Of course, it's a bear trend. But Google, the 10-week is going up. It's crossing above all other weekly key moving averages, such as that 50-week now, the 100-week. Oh, boy, look at that 20-week rising. And when that 20-week crosses above the 50-week, that means that the pullbacks, once that liquidation is out of the name at the lower levels, are going to be great entries irrespectively, because it is not a bear trend. It is the beginning of a new bull trend that we are monitoring and have been involved in since the gap, before the gap up. We were buying down here, and we have players longer term that are still in the move, but at times you have problems that happened last week. So the MACD is still rising at 11.79. That means that there's strength even within the distribution weekly bar. We're going to be watching in our platform that on the weekly level is how we come up here and challenge this diamond, but most importantly is that we have to get a weekly closing diamond during the Thanksgiving. Happy Thanksgiving, everybody. The next week, this diamond here has got to get back above that weekly diamond and then move higher. That diamond area right here that comes across these tops right here, and that middle diamond that tested it, that closed below it, this is the ultimate test. If we fail it, then we'll have to be getting the put side of the market for, maybe it goes down another delta and comes. We don't know what next week brings, but we're ready for it. As long as we can hold and get a diamond reversal back above here, we will challenge this diamond high up here, back on 7/18 of 2011. And this diamond high is where we would come back up above that. This diamond high is at resistance level. We would come right back up at 594. That's 515, a little bit above it. But not only that, we would come back above it, blow through it, and then land and build a base, depending on the players in the market. If it looks like the super committee in the United States is going to collapse, well, Google's going to probably act different. If Europe is going to not do the right thing either, well, then the market's going to have a lot of dominating negative force in it. Well, we'll probably break down here to the key levels of these diamond support levels down here. Should that be the case? We don't know. But we have a light trading week, and it's all about this trend right here. It's all about this top. It's all about that 4-week base and how much strength that this new bull trend with the moving averages going up and everything is working that way. Same chart. This is just a public chart. This is the weekly chart that's important. I'm also just going to show something very quickly in the daily. And in our daily charting platform, which is a market maker platform, you can clearly see here. There it is. So each one of these values here are $5.38 per line for Monday. And I'm going to do the diamonds. You can see the diamonds will populate, and each diamond has a lot of value in it as to directional movements. And on a daily chart, you can clearly see where that diamond is right here. That's the close. And you can clearly see across the daily here that we could drop down to the 590 area and we would have to hold support. If we come down to a full delta, then we're right back in this area and testing this market area. We don't know what the austerity is going to be next week, but we have to be prepared for the put side of the market as well. And we have to be prepared that if the put side of the market and there's the 10-day simple moving average, that you pull back to the major part of the base area of the breakout highs right in here. This is the candle, okay? And I will tell my MMTs that if we do fail and want to come all the way back down here, hey, it's all going to be relevant to what the market's going to do, and if we have to make the change and get net short because of forced liquidation or worldwide events that would create people to sell, well, then we got to make sure that we're getting paid that way. In the next video segment, outside of it, we're going to look to see in our plans where this part of the market holds. This is a major diamond area right over here. Now, when I take where these tops were on this daily chart, we came up here to one of our targets from here to there. Now, it's this major area right across where these diamonds are. And it goes right over here to where that breakout was. This is going to be the key level of support on Monday. If we come down a teeny line, we'll see how they respond at this 2 1/2 delta breakouts here. Okay, so it looks like a half a delta on the chart is 7.76 cents per line. And it's already priced it. This is what we're looking for. We're going to see exactly per line where we come down to. If we want to drop down here in the futures market, this would be the most major area of support. But we'd rather see this area. This area could hold right in here. That diamond all the way across right here on our platform. And it's almost approaching that low. Okay, that's support 1. Support number 2 is down here at this diamond. Right here if we delta down. What would end up happening? As we all know, the put side of the market that got 85 cents that went up to 640, we'd be buying that put. We'd be buying the put side. The call side, we're looking for entries. They get marked down, but nonetheless, if we break in them support, we're going to be on the put side. Should that be the case? That's case 1. Case 2 is if everything works well on Google, on the weekly chart in the platform, the SMF platform, then we're going to do quite well. Here's that daily support. This is going to be the key area, looking at it from a daily. And that could be 1 delta down here. Or we consolidate and move up with buy action bars, and they have to look like this. They have to look like this. They have to look like this. Once you pull back off an intraday, weekly or monthly trend high and weekly, daily, it doesn't matter. You get support and you've got to come back up. You've got to get back above these daily simple moving averages. They're calculated differently than some of the others, but you're selling below the 20-day and the 10-day. We're going to monitor calls and puts, and we're going to trade this name into the new year, and either it's getting paid bigger on the put side on the pullbacks, or we're going to hit support and the calls are going to get put in. You can see what happened to some of the calls here. We'll do this in a separate segment